The unemployment rate moved up in December to 6.8%, but Canada also added jobs, 8,200 of them. Let's talk about the numbers and how they could weigh on the Bank of Canada's January decision with Tiago Figueiredo, macro strategist at Desjardins. Thanks for joining us today.
Of course, thank you.
How do you interpret this? What does it tell you about the economy and where we are?
Well, I will say that these numbers have finally come down back to earth after three of the prior months being some fairly strong readings. I think that the number that we got today is a bit more believable. When you look at the details of the numbers here, it's tough to really glean much insight from it. I think the bottom line is really that we are seeing the labor market start to stabilize. I do believe that the labor force survey is probably overstating how much progress we've actually made on the labor market, but overall things aren't getting worse, and I think that's good news.
Okay, so when we look at the kinds of jobs that were lost, technical, scientific, and quite a number of them, versus jobs gained in manufacturing, does that provide any more clarity on sort of our economic strength in the country?
We do know that the trade-related sectors have been hit pretty hard, although we've seen some stabilization there. Like, those sectors are still reeling a bit, so it's tough. I mean, one thing that we are also looking through in this data is kind of seeing if there's any signs of spillovers into other sectors, like is the weakness spreading? And I don't think that's the case, at least with what we have so far. So again, it's kind of what I said, like it's a bit of a mixed bag here. It's tough to say. Like, we've had obviously some improvement in the labor market, but nothing in here really suggests that we're seeing a remarkable improvement or something that would really push the Bank of Canada to start to contemplate potentially raising rates.
Let's talk about the youth unemployment, because they did see some gains October and November of last year, which people were happy to see after many, many months of being very low. But now it's taking a hit again. So would this be sort of a seasonal change, or what's your read on what happened there?
The youth unemployment numbers are, again, they're very messy. I think part of this is really just the story of non-permanent residents and this flow of people going in and out of the country. It's really tough to say kind of with any certainty with what's going on there. Again, the unemployment rate had been historically very high relative to other sectors, and again, a large part of that was that a lot of people coming into the country were people that were in that age bracket. Now we're starting to see some of those people leave, and that's putting some downward pressure on the employment rate. Again, the pop this time around, I think it's just noise in the data. Okay,
so that's a staggered effect of people still leaving the country, perhaps with the immigration changes that have been announced. Does any of this change your outlook for the Bank of Canada and the rate cut path?
Not particularly. Like I said before, we were a bit skeptical on the strength that we had seen in the labor market. I know the market had kind of rushed to price in a potential hike by the end of this year. I still think that the economy is still very vulnerable to any potential shocks. Actually, I think that the risks over the next kind of 6 months are probably skewed towards the Bank of Canada potentially cutting. It's not that I expect that to happen, but if we do get hit with some kind of shock, some negative shock, I think the policymakers wouldn't be afraid to lower rates. As we get into the end of this year, I think the story shifts a little bit. We start to see fiscal kind of pick up a bit, and that kind of shifts the risks a bit more. But at least in the near term, it seems like the Bank of Canada is really the only game in town to protect the economy if things sour.
Okay. Is it your impression from your conversations that employers are still hesitant about the economy and are holding off on hiring?
Yeah, that's still the case. And again, that's kind of one of the things where when we were seeing all these strong labor force kind of reports over the past few months, the hiring intention side of it, the forward-looking part of it, still looked fairly weak. So that's one of the things that I think hasn't changed, and it's probably going to get even muddier as we start to get a better as we start to hear more headlines around USMCA and the future of that agreement and what that can entail.
Okay, let's talk about our neighbors, because they had jobs data come out as well today. There's growth, but it's very, very muted. What do you see forward for the U.S. Federal Reserve in that country?
Yeah, I mean, again, the labor force or the U.S. labor market is, we're seeing a deceleration in hiring. The market's been paying close attention to the unemployment rate there. It's hovering around levels that would be consistent with kind of the FOMC's long-term kind of forecast. So there's not too much concern there, but I do think that downside risks still remain for the U.S. labor market, but the committee will be looking at this and be like, okay, the economy is not falling off a cliff. Growth's still fairly strong. The labor market slowing, but nothing too scary at this time. And I think the bottom line is that they probably still remain on hold, at least for the first half of the year. We still see them cutting going into the end next year, but I think in the near term, there doesn't seem to be much rush to lower interest rates.
Okay, in Canada, what would be the thing that you're watching for that could sort of derail the economy even further? Is it perhaps if Kuzma gets set aside or that deal does not get renegotiated?
Yeah, I think that's one of the big risks here. That's one of the big things that we're kind of flagging in the first half of the year as definitely a source of volatility, but also something that could definitely change the outlook going into the end of the year.
All right. Is there another big one you're watching, or is that the big one?
That's really the main one. I mean, there could be always other things that pop up with related to trade or anything else, but really, like the thing that shielded Canada has really been USMCA from a lot of the tariffs that have been implemented, and any kind of threat towards that, to the removal of that agreement or anything that would kind of push that agreement to be less concrete, is something that would be quite a material change to Canada, and I think that would kind of force us to adjust our outlook, and the Bank of Canada as well.
All right, Tiago, appreciate you joining us today. Tiago is a macro strategist at Desjardins.